Hi, my name is Mahesh. I am co-founder at Outlier, where we take investor behavior to predict stock market trend so that you can win more trades. So let's start with our let's start with the Fed's meeting today. So Fed is probably going to increase the rates. So we have a meeting that is coming up today at around 2 p.m. Eastern. What we are looking here, we are looking here of an increase around quarter of a percentage point today. So this rate increase is literally the highest in last 22 years. So what will be the impact? So the biggest question that people ask, are we in recession right now? I would say no. Yes, because of increase in rates recently, there has been impact on the consumer lending, business lending. But you have to look beyond that. You look at the employment numbers, right? So they have been like the unemployment rate has been low. The consumer spending, uh, it is there. It is, it has not gone down as Fed has thought it would be. So I won't say that we are in recession right now, but will we be in recession in coming months? That you have to ask Fed, because if they keep on increasing the rates, right, the consumer spending, the consumer lending will become more and more difficult, right? The businesses will have hard time borrowing money, spending on their, to hire more people, spending on their R&D or whatever they do. They are going to have hard time doing that if Fed keep on increasing the rates. So in that scenario, we may look at recession, but right now at least we are not in recession. The good thing is that the Fed, this may be the second last rate increase. There we may be looking at one more rate increase in coming weeks, or sorry, coming months. So let's look into our second story. So the next one, I want to talk about the financial sector, right? So this has been the talk recently. We have seen the rate increases, like the expectation is, the financial sector possibly going to be in free fall, but you have seen it has been running up. I'm looking at, I'm an outlier.com dashboard. I'm looking at State Street Sector Spider for financial sector XLF. So it has seen this run up most recently. But one thing I will be very like careful, like will be very hesitant about, like if I have to look into long term positions right now to get into any of, constituents in the financial sector, I will be very very careful. Why? You look down here in the constituent map, which is essentially a fear and greed map for all the companies in the financial sector. Right now it's at greed. So there has been a lot of greed. People have been putting money in the financial sector, in the companies. It has seen the recent run up, but we may be looking into a correction in very near term. It may happen tomorrow, it may happen in 1 week, in 2 weeks. Now, I cannot say that, but we may be looking at correction. So I will be very very careful when I'm looking to get into buying, stocks or options, at least in near term future. Also, the same story if I look into the top constituents in the financial sector. So, looking at Berkshire Hathaway's recent run up, we may be looking into correction as well. Same thing with JP Morgan Chase. We have seen a recent run up, but I will be very careful to buy any stocks right now in the financial sector, because we may be looking at a correction. So the third story I want to talk about today is the merger between Bank of California and PacWest, which was announced yesterday. So let's talk about the little bit about the health of the banking sector right now. So how do you check that? So there is something called loan to deposit ratio. It doesn't tell you the quality of the loans yeah, that they make, but it does tell you about, let's say if I received $1 in deposit, and if I am loaning out that $1, so my loan to deposit ratio is literally 100%. So whatever is coming in, right, I am loaning out. So this loan to deposit ratio, so if you want to check the health of the banks, in United States or wherever you are at, right now, you need to look into this ratio. And I pulled this article from SP Global, and I'm looking at some of the largest year over year increase in loan to deposit ratio for some of these banks. And if you see here, you'll see PacWest somewhere here. So yeah, so PacWest loan to deposit ratio was around 101%. I would say the healthy range, in my opinion at least, it's between 80-85 percent. Why? You do not want to take too much risk, right? So I believe the Silicon Valley's loan to deposit ratio was somewhere around 115, if I'm not mistaken. I may be mistaken about that, but somewhere around that ballpark. So you do not want to loan too much, right? But if you do not loan, right? So for example, in case of many banks, if the loan to deposit ratio is, let's say, 50%, right? So that means they are not loaning enough. Banks are in the business to loan money. So the two ways they make money: one is by giving out loans. The second thing, they keep their money in the central bank, and they receive um, whatever interest rate the current interest rate is. So right now, because the interest rate is higher, a lot of banks are putting money in the central bank. I mean, they don't want a loan right now. So there are banks which have given out loans recently, and you need to probably look at these numbers. And in my mind, I would think about, hey, what our potential next targets are. Maybe some of these banks from this list. What do you guys think? Do you think that one of these bank will be potential for acquisition or merger in coming weeks, months? So time will tell. And this is the list of second set of banks where you have seen the decrease in loan to deposit recently. SoFi is one of them. American Express is one of them. Their year over year growth in deposit, I mean, it has gone up, especially if you see in SoFi, the deposit growth is pretty high. So again, thanks for joining today. And if you have any questions regarding topics that I covered today, please leave them in the comment. Do not forget to subscribe to our channel. We try to cover some interesting topics, latest topics in our podcast every day, Monday through Thursday, when market opens. Let me know. Thanks for joining.